Good evening. I'm Gabriel from Affluence Public Relations, and I'll be your host for today. Thank you very much for joining us at our webinar, Investing 101 for Kids, Insights to KidSave. Before we begin, we have some reminders for our attendees. If you have a question you'd like to ask, please feel free to use the Q&A function, which is located at the lower right-hand side of the screen. We'll try to answer your questions at a later part of the webinar. While you're not able to travel back in time to take advantage of compound interest, you can do something today by giving your children the financial head start you never had. So, how can you get your child to monitor and trade? What are the whys and hows of investments for kids? And how should you choose the right investment tools for your child? Without further ado, we invite Mr. Victor Lai, founder and CEO of SquirrelSave, to share his insight on investing for your children. Victor is a corporate entrepreneur with over 25 years cross-industry experience in investments, insurance, and healthcare. A chartered financial analyst and certified financial planner, Victor has a Bachelor in Economics, first-class honors from the University of Adelaide. Victor, please.
Thank you very much, Gabriel, and welcome everyone to tonight's webinar. I hope you've had a little bit something to eat, but I'm going to try and speed up so that you'll have enough time to go and grab your bites and expand your waistlines. Thank you very much. This is SquirrelSave, and just by way of introduction, some disclaimers for you, all right? And we are on the mobile app for Android and Apple, and this is our website at the bottom right-hand corner. So please do welcome to visit us. We are licensed by the MAS, and we have a capital market services license for asset management. This is just a brief introduction, my background. I have cross-industry experience in investments, insurance, and healthcare. I have run several of these companies, and one thing I've learned is there is a data link that converges all three, and I've decided to try and democratize finance by launching SquirrelSave. And so I'm happy to share this with you tonight because now even kids can invest. First thing I'd like to share is in the investment world, many people talk about returns, but I believe, as I have experienced through my career, that risk is more important to figure out first before returns. So we need to actually figure out how much risk we can tolerate before we can invest. The problem, however, is that being humans, it's understandable. We are not very good at managing risk. So it is something that I've borne in mind to develop technology for finance. So that's why we call it fintech. Many people like to tell you about returns, and they tell you that if you want higher returns, you have to take higher risks. But I'm afraid they're only telling you half the story, because they have an agenda in mind, which is to get you interested and to buy something. It is important for us at SquirrelSave to tell you that the other half of the story is that if you take higher risks, you also expose yourself to higher losses. And that is the full story. And that's why we apply machine to actually do this, because humans can't do this. We're emotional and we want returns, but we don't want to think about the risks. So we applied a very sharp idea in finance, which has won a Nobel economics prize, Markowitz himself. And it's the concept of diversification, that there is only one free lunch you can get in investing, and that is if you diversify. So it is very difficult for people to accept this, because until technology became available in the last 5 to 6 years, where AI is now accessible to the man in the street, we, including myself, used to be a professional fund manager, managing money for clients. And we believe in convincing you to part with your money so that we can manage it for you. And we call it active management because we're tracking the markets, we'll pick certain stocks, and we'll try and make sure we get good returns. But actually, we're exposing you to big losses as well. And all you're doing is outsourcing your own trading behavior to me. And I'm trading on your behalf with the claim that I have done it longer than you have. So I think it's time to drop that because active managers, according to all research, has not been able to beat the market over the last 15 years and more. And the data continues to prove that. When markets are good, we all look good. When markets are bad, we say it's a long-term investment. So that is the secret. Nobody is so good that they need to manage your money. So that's why I use a machine, because machines can look at diversification as a mathematical problem to solve. Humans can only solve up to so many, even the smartest quiz kid in class can only solve up to a certain extent. But diversification, now that the global markets are here, it used to be 25 years ago when I started investing, you could only invest in Singapore and Malaysia. You could hear about Hong Kong, but you can't invest there. And then we could invest in Hong Kong after a while, but it's very expensive. There's telegraphic transfers and so on. And today, on a mobile phone, you can invest in the whole world. There are so many things out there. What do? The best way is to use the data and diversify. And here on the screen, I show you in a simple way the concept of a pizza, with each pizza slice being different in spiciness. And we mix the sizes of the pizza to make sure that the composite taste is appealing and fits your taste buds. So that's what we do, but we now use a machine to do these very complex calculations 24 times 7. Not only that, SquirrelSave, once we have the mathematical technique, the quantitative methods that we've tested using artificial intelligence techniques, then what do we use as the ingredients? Tomatoes, capsicums, if you want meat, or you are vegetarian, or you're even stricter, a vegan. So we have looked at all the products, and you can see them on your screen, from the traditional unit trust to just buying an outright stock. We have chosen and studied exchange-traded funds as being the most efficient, lowest cost, and transparent. And in fact, that is what you should be investing in, and not the other products, if you want efficiency, simplicity, transparency, openness. So that's what SquirrelSave does. And we have assessed the exchange-traded funds, if you look at the bottom of the screen, in terms of return and risk, right? That's what most people look at. But behind the scenes, the knowledge and effort you need to get into the product, the minimum sum, pricing, cost, and so on. And even then, for ETFs, there's still a minimum sum, right? So we've applied technology now to remove all these barriers in SquirrelSave. What we have done is to apply artificial intelligence, because simply put, it's already arrived, but many people in the finance industry don't want to change. They still want to follow the old methods. So I'm going to show you a little video to demonstrate and summarize what we have done.
Okay, so there might be some technical difficulties you're facing right now, but not to worry. We'll replay the video once more.
Sorry, Gabriel, are you able to hear the sound?
Oh, unfortunately, no sound yet. No sound from the video. So probably need to replay again.
Okay, I'll do it again. Okay, this time tell me if you can hear the sound, and then we'll proceed.
Investing is never simple. So much information, too many products. How do you protect your assets? SquirrelSave solves these problems for you. Tailored to your age, assets, and investment objectives, SquirrelSave provides a personalized asset management solution. Works 24/7 for every stage of your life based on your needs. The transparent SquirrelSave algorithm is built on Markowitz's Nobel Prize-winning modern portfolio theory. Your tailor-made portfolio will be diversified across different investment markets with exposure to domestic and global assets, seeking returns while mitigating risks. Our machine learning AI algorithms have been trained with more than 12 years of past data and 3 years of real-time market information. SquirrelSave goes beyond traditional static asset management by adjusting to real-time market changes in line with your personal risk profile. By dynamically allocating across asset classes with low or negative correlations, SquirrelSave controls volatility to preserve and grow your wealth. We deliver good risk-adjusted returns consistently. We make low-cost investing available to everyone. We innovate by using AI and machine learning. We make global investing easy for everyone. We create value for you. No knowledge needed. Simply decide your risk profile and we do the rest. More than 12 years of training, tracking 574,000 real-time global factors and analyzing over 21 million data sets. Presenting your personalized portfolio in seconds, covering 5 continents, 15 asset classes, 35 countries, and over 2,000 products. SquirrelSave. Smart investing for anyone, anywhere, anytime.
Thank you. So that explains the technology behind. Let me just elaborate a little bit more. Machines can calculate in the nth dimension. As humans, we calculate in 3 dimensions. So our machines actually calculate whether a market is in a bull or bear phase in simple terms, but it's actually more complicated than that. So we apply artificial intelligence to do these predictions. And then we structure a data lake. We pull data from around the world, and it can be divided into economic data or sentimental data, and we organize the data, all right, to make sense of it into different factors. And then we apply mathematics at the strategy layer. And then finally, it comes to you on the website or your mobile app in the form of a retirement plan, education plan. And of course, today, we're going to show you that one of the outcomes is also a product, which not only adults can invest in, but children as well. This screen basically just shows you the mathematics behind it. It's basically using mathematical models to recognize patterns in data, and you can do ranking, clustering, separation, and so on. These are all very, very well-known mathematical techniques. But today, the computing power and the flow of data is real-time, allows us to do this, and so it's called AI because a human can't do it. What we have done with AI is to divide it into 3 broad, simple things. It's a lot more complex, of course, but for you, you'll know that there's machine learning algorithms that we've trained the machine on, and then we map it into products, in this case, exchange-traded funds, and then we build in all the human know-how and automate it. For example, we can fractionalize the ETFs from 1 share into fractions, right, up to a few decimal points. So you don't actually have to buy 1 share of an ETF. We can buy fractions for you. We have got rebalancing algorithms that will calculate whether the commissions are worth the rebalancing, etc. So we avoid trading the account and churning the account. So those are all the real issues we've automated. And finally, the outcome is we now can give you an AI intelligence to drive your portfolio diversified across the whole world for $1. And for $1, you can get exposure to all the kinds of stocks in the world across from, say, China, Brazil, Japan, the USA, of course, etc., from $1. We'll show you later a live portfolio. So ultimately, what you need to know is that our machine is trained to try and target the highest return for the risk that you are willing to take. And it works for you 24/7. And we have now put it on a website. You can sign up online 100% without talking to a human being. And you can download it on Android and Apple. And in fact, someone told me they actually signed up with us while on the MRT. So that's amazing these days. So when you sign up, what you get is you get access to the global markets without you having to know anything about the global markets. Our machine takes care of it, right? You don't have to make daily decisions. Our machine, again, watches it. And it doesn't do daily trading for you, by the way. We don't do trading. We're investments, right? And finally, all you need to know is know yourself. What risk you want to take, how much you want to put in. You can withdraw anytime. So it's highly liquid, no lockup. And the important thing is you can start from $1. But it's no point investing $1. But if you wanted to, you can start with $1. No bank, no financial institution is willing to do that because they don't earn enough fees from you. But we are using machine and we want to think long term. So we're willing to do this for the market. Next, I want to show you the returns. The machine does decent returns. We don't try to tell people we do huge returns because that's not our style. We are not traders. We are investors. So as long as we get a decent return for the risk you're taking, we think that's a good try, because what we're more concerned is to protect you from the downside. Now, as a demonstration, if you look at the screen, there are 6 charts, right? So look at the 6 charts, 6 different stocks, maybe 6 different countries, maybe, right? Each is different, as you can see, right? So you can see there are many jagged lines, but roughly using your eyeball, you can see each chart. What is the trend line? And say these are 6 different markets behaving differently. But let me give you a revelation, all right? Because I want to demonstrate why children should be the best people to invest. Now you can see on the screen, it's a bit fake. I can show you basically on the x-axis, you can see certain numbers, right? Then you notice they're not the same. Why? It's not 6 different countries. It's not 6 different stocks. It's actually the same thing. It's the S&P 500, the largest market in the world. What I'm showing you is how the S&P 500 behaved at different time horizons, time periods. First, on the top left-hand corner, daily, right? So you can see the pattern. Weekly, wow. Can you see towards the right-hand side of the second center chart, how much it's dropped in 2020? That's the COVID crash, 34% down. Then you see a 3-month chart, right? Then you see a 1-year chart. Then you see a 5-year chart. Then you see a 25-year chart. What I'm trying to show you is that for the S&P 500, if you have held for 5 years, even if you went through the COVID crash, which is this piece here, you would still be on a trend line up. But if you panicked, you would probably have sold when it's too low, and you have given up all your gains over the last 2 years. So on a 25-year, wow, if you just bought and slept, that's what passive investing is about, you would have done well, all right? But if you had followed the market actively, yeah, some of you may have sold at the right time, but most of us would have sold at the wrong time. So this is something I want to teach you about time horizons, all right? And here is some data. You can see on this chart, all the crashes, since 1969. If you were living in not living, you're still living, but if you were trading, investing in 1975, you would have experienced New York City on the brink of bankruptcy, right? That's scary, right? And you would read about it only in the newspapers. There was no internet. You learn about it a week later, maybe. So, and you'll be the last to learn. It's the guys that are maybe in the embassies that may have more information because they get the telegraphic messages and so on. And then look at it now. The world has become global. Information is flowing instantly now to everyone. And all these crashes, when you look back in time, meant nothing. All right? So the market, the lesson you need to learn, rides out every crisis, and time basically smooths out volatility. Time smooths out volatility. If you want to invest and you want to return in 3 months, my goodness, then you better make sure you take a lot of risk and take a lot of losses, because it's too short a time for you to absorb the up and downs of the market. But if you can take a 5-year view, you will be able to absorb it, because if you look at every crash, all right, if you were here, can you see the 2001 NASDAQ.com bust? It would have been scary. You thought it's over, it fell even more. You thought it's over, it fell even more, right? And by this time, people were tired, they sold, and the markets would recover. But you see that every crisis in about 2 years, you're out of a crisis. So when you're at the bottom here, in 2 years, you're out. So if you take a time horizon, I believe, of anything less than 2 years or 3 years, then you're really taking a lot of trading risk. I would recommend to invest for at least 1 to 3 years and stick it out, whether the markets are up or down, because the markets, as you can see, trends up. So I'm going to show you actual data, all right? Here you can see all the crises, and basically in the following year, what is the positive return after the previous year, and what is then the next 5 years. So all the data tells you that you should stay calm and invest on. Avoid market timing, but most importantly, reassess your comfort risk level and set it right. And then most importantly, stay diversified. But as I said, until technology came about, it's very hard to diversify. And even if you try to diversify on your own, you can't track the US market because it opens at 4:30 in the morning. You'd be asleep in our time zone. But hey, let SquirrelSave do it. Our machine doesn't sleep, and it can track the markets as the earth turns, as the sun rises, and as the sun sets. The other thing, therefore, I want to share with you, no matter what, the lesson that I've learned over the last 25 years is that just stay invested and compound your returns. All right? If you keep taking your returns out, you'll never grow. So compounding power is very important. I know it for myself. It's too late. But hey, it's not too late for our children. Start early. And so we at SquirrelSave have created a special goal called KidSave, which every adult can open for a child. Here, meet Sasa, our mascot, and she wants to tell you that with SquirrelSave, even kids can invest. So watch this little video.
Start them early. Let your children see their savings grow. Introduce your kids to the world of smart investing with SquirrelSave AI.
So KidSave is available to all of you. There's also another issue. What if you don't know how to choose your risk profile? So we invented a game which you can play with your kids, and you can learn about how we assess your risk profile based on the choices you make. So this is our gamified risk profiler, and it's very unique. Next, this is our dashboard. You can see that we have a KidSave goal created. For the adults, you can build wealth, you can do retirement saving, you can plan for your education, and you can now save for your children. So it's a very simple thing. With KidSave, what we have done is that we can give the parents or the sponsor, I'd like to call it, the chance to actually create a user login for the child or the person you're sponsoring. By the way, some of our clients have invested for their domestic helpers. They're not children, but they've taken advantage of the KidSave capabilities to invest for their helpers. And some people, including myself, have given hongbao as an investment account rather than to give them a present or cash. And it's growing over the last 6 to 9 months. So you can actually let the child view the account and create some intellectual curiosity about how investments work. The first lesson to teach them, investments don't always go up. Investments go up, they go down, But over time, as I've shared, with compounding, it tends to go up. And that's what the data clearly shows. So Squirrel Treehouse is a complement to support KidSave. And I hope you enjoy it. This is the login page for your child. If you give them the permission to log in, they can only view, they cannot make any deposits or withdrawals. And we have lessons, basically, that parents and children can share interactively. And here is a sample. We have written 3 books and 3 videos. There are quizzes in the videos, which you can answer, and you get rewards, acorns, which are then accumulated for the kids. And we hope by next year, they can exchange those acorns for merchandise. We've got bags, we've got stickers, we've got pencils, things like that. And here is our acorn squirrel family. We've got Mama, Dada, all right? And we use the squirrel family to tell stories about what is a need, what is a want, right? What is important about saving, what is good about spending. So we have the children. The eldest girl, Sasa, she stands for save and save. And then we got Momo. He stands for money, money, spending. And Gigi, the baby girl, stands for give and give. So together, they can tell stories. And we're going to take this to the region. Next, feel welcome to read and understand with your child the concepts of money. And here is a sample.
I will work hard to earn more money.
Eating out is expensive. Let's buy healthy vegetables to eat at home.
Look at the price and quantity carefully. Some vegetables offer more value than others.
You have learned that when you spend, you save less.
And even if we spend, we can share with others.
So there's Squirrel Treehouse, but now let's talk about the financial performance. And I'm very happy to say that the COVID crash gave us an opportunity to live test our artificial intelligence. Prior to this, a lot of my colleagues and competitors in the traditional asset management were concerned that machines won't be able to react to crisis. But COVID came and we went into it, and the data you can see. During the COVID crash in March, the S&P 500, the world's largest market, dropped 34%. Here is an actual portfolio. It happens to be mine because I started it. I'm the first customer of SquirrelSave, obviously. And I beta tested it on the 1st of June, 2019. So on the 18th of May, when we looked at it, all right, it's almost a year. And we could see that the portfolio, which started with $15,000, was actually around 16,000 plus in January 2020. COVID then hit on the February of 19th, and it fell all the way to March 23rd. And my portfolio, my Squirrel portfolio, dropped only 10%. Why? Because it's diversified. Why? Because SquirrelSave is designed as an artificial intelligence technique to try and control the fall. And so it did a good job. Next, let's look at the recovery from May, all right? On May, you measure against March 23rd, which was the bottom of the market. The S&P 500 was still 14% below its peak. But look at my SquirrelSave portfolio. On the same time zone, it had recovered. It was only 1% below its peak. Again, the AI is able to recover. Now, important thing is that you can try it out for just $1. So what are we waiting for? Here is an actual $1 portfolio. You can see here the asset value is $1.02. The amount that was deposited was $1. So it's easy to calculate. 2 cents on the dollar is a 2% return, right? But let's take a look. This is a conservative portfolio. You can choose the risk setting. It was started on the 18th of May, all right? And as of 9th November, we measured it. It's up 2%. And that, if you annualize it roughly, it's about 4%. For a conservative portfolio, what do you earn in the bank today in the savings account? Less than 0.2%. What if you put into a fixed deposit? Maybe 1%. Here, it's a 4% return, all right? And here on the right-hand side, what does that $1 do? The $1, our SquirrelSave AI puts them into 5 different fixed income or bond products. Now I can tell you, as a human being, I can't do it. Not for $1. Not only that, it's put you into a developed equity, NASDAQ, Japan, and S&P 500, the US market, emerging equities, and of course, cash. 11 asset classes as a whole for $1. Not possible. No bank does it. SquirrelSave, we can. What about an aggressive portfolio? Here, let's take a look. This is a very aggressive portfolio, and the return is $1.07 from $1 deposited. That's a 7% return in 5.5 months, or a 13% annual return. If you put money in a fixed deposit for a year, maybe you get 1 to 2%, but this is something that has some risk, but the artificial intelligence manages the risk through diversifying. And here, the very aggressive portfolio has got 7 asset classes, and it has a decent exposure to NASDAQ, which has done well, and the return is pretty decent. So therein lies the results. And this is my same portfolio, which I showed just now earlier. And this is 17,500. It was originally 15,000, and it's across 12 different asset classes. And I have achieved about annualized 8%. So that is all I can share with you. Happy to share more if you have questions. And please think about how we can help our children save, because they have the longer time horizon than even the adults. So if you start now, even with $10 or $100, take advantage of market volatility to generate returns in a smart investing way. So thank you. Over to Gabriel, and I'll be very happy to answer your questions. Thank you.
Thank you so much, Victor, for sharing. And right now, we're going to open the floor for questions. So if any questions, please use the Q&A function, and Victor will attend to your questions. So Victor, while we're waiting for questions to stream in, would you want to just share about the promotion we're having for KidSave?
Right now, if you invest $20, we are actually giving you a sticker set. And if you invest $500, we're giving you a SquirrelSave bag. I'm not sure whether you can see it on the video, but this is a SquirrelSave bag, for example, right?
And it comes in blue color as well. So we have a pink and a blue.
Boy and girl.
Yeah. Okay, we have questions coming in. So Victor, would you like to just address them?
Sure. Okay. Can we top up as and when we like? The answer is yes. You can just go in anytime, top up, and you can also withdraw anytime you like. It's like a bank account. The only problem is that as you top up and withdraw, and if you do it too often, especially when you withdraw, the returns will be affected. All right. So the answer is yes. The other question is, they said that I put in 15,000 and I didn't top up, I didn't withdraw, because I wanted to show people how it behaves. But for you, if you want to put in monthly, of course. You want to put in weekly, of course. You want to put in as and when you feel like it, of course. So those are the questions.
Okay, so if you have more questions, just feel free to ask ahead, and Victor will be glad to answer a question. So Victor, I have a question for you as well. So let's say, for instance, given the fact that, right now, the market is somewhat volatile. So in your opinion, how can actually SquirrelSave come in to help investors in terms of investing in this volatile environment?
Yeah, the first point to make is that the lesson I've learned is that there's never a good time to invest. The real answer is you should invest early. And what does that mean? You should invest now, full stop. And what you should do is you should keep topping up as you go, and basically take advantage of the market going up and down, but it will trend up over time. If you try to time the markets, that's not investing, that's trading. We don't do that at SquirrelSave. So for myself, I put in the 15,000 as you can see, and I didn't top up, but I didn't withdraw. And what I did was I set up separate goals. SquirrelSave allows you to set up multiple goals. So the first one I set up, I was the tester for my own product. So I was the first customer. So I set it up and I don't want to touch it because I want people to see how it behaves. But since then, as we launched, I set up an account for my child, right? So I put a goal for my child on his birthday. Then when Christmas came, I didn't buy him a present. I put money into another goal, right? And then for my daughter, another goal. My wife, I put another goal. So they don't get flowers and gifts anymore. I just put money. And when Chinese New Year came, I gave a SquirrelSave account goal for each of my friends' children. So they've got $20 now, it should be $21, $22, and so on. So I wanted them to also appreciate how investments can grow over the time. And if it grows 1% on $2, that's 5% return. I mean, if they had it in their hands as Hong Bao, they would have spent it. They put it in the bank 0.2% or less. And the bank charges also if you're below a certain amount. So I think we can take advantage of the investment markets using AI to start investing as early as possible. And so I recommend this strongly for children because they're the ones with the longest time horizon.
Okay, so now we have 2 more questions streaming in. So Victor, you can just check your Q&A.
Okay, someone asked if we put in money as and when, will the interest rate be affected? The answer is no. We are not a bank. We don't pay interest. But what we do is maybe what the client was asking was, is the return affected? My answer is yes. The investment returns will be affected as money goes out, but not as money goes in. Because as money goes in, you are staying invested. But as you pull money out, you may miss the points at which the markets are doing well. So yes, the returns will be affected, but I'd like to emphasize we are not a bank and we don't pay interest. All right, so it's investment returns. The other question is, what are the charges? Okay, so we charge 0.5% flat as a management fee. So if you invest $100, 1% is $1, 0.5% is 50 cents. So if you invest $100 and you keep it there for a whole year, right? What SquirrelSave earns is 50 cents. If you invest $1,000 and theoretically you don't do anything with it and you keep it there for a year, then SquirrelSave earns $5 on $1,000. It's flat, it's easy to remember, easy to understand. Compared to other investments, okay, if people invest in unit trusts, right? That's very common. As you walk in, you want to withdraw your fixed deposit, someone will somehow know and knock and come and say, hello, can I have a chat with you? You're going to withdraw your fixed deposit. How about investing in this product? It's got this kind of returns, but there's a lockup. You have to keep it for 3 years. Then you can get this kind of return, but it's only projected. Or they'll say, why don't you invest in this China fund? China is going to be doing well. Buy a China fund, minimum $1,000. But hey, unit trusts, mutual funds have got a management fee of easily 1 to 2%. And you can read the Straits Times or the Business Times, they've done it, or the surveys done internationally. Singapore has one of the highest fees paid for unit trusts. All right. So my goodness. So money, your returns are being eroded by these fees every year. If you make 6% return, 1 to 2% is taken away by the manager. Not here, not at SquirrelSave, right? And if you invest in structured products or investment-linked products, there are fees hidden below, and it can be 3, 4, 5%, depending. So at SquirrelSave, it's only 0.5%. And what we want to do is we want to make sure that our interest is the same as you. So we take only a small management fee, but hey, if we do well for you and we generate positive returns, we will share 10% of your profit, right? So if you make 10%, we take 1%. It's just 1% out of 10% return. So that's a 10% performance fee. But that fee that we earn comes from money today that you don't have. It comes from your returns, the money that we generate for you. So we're taking it from returns. We're not taking it from your capital. So we're quite different from other people in those aspects. Thank you for the question.
Okay, so yeah, Victor, there is one question that was posted on the chat. So you happen to see it?
Okay, sorry. Let's see. Can't hear video. No, I'm just kidding. Okay, what type of instruments that SquirrelSave invests in? The answer is exchange traded funds. The other question, it's the same question. Yes, it's exchange traded funds.
Okay, so all right. Okay, that one more question. Okay, so there's another question.
Right. Okay. Any withdrawal fees? The answer is zero. No withdrawal fees. Yeah, so therefore it's liquid. No charges for withdrawal. We only impose the performance fee upon withdrawal. All right, that's all. That is if you are making profits. If you are not making profits, there is no performance fee.
Okay, thank you. So we have another minute left before we call the end to this webinar. So, okay, so just post your questions on the Q&A, and Victor will be glad to answer your questions. So, okay, so regards to the question, what type of instruments that SquirrelSave invest? So it mentioned that ETFs, exchange traded funds as well. So would you like to also just elaborate on, like what are the different pillars that or different funds that, SquirrelSave does invest? Just give a little bit of idea.
All right, SquirrelSave, as you saw in the video earlier, the machine looks at the whole world, and the whole world, we map it using exchange traded funds. So there are exchange traded funds that represent things like gold. There are exchange traded funds that represent things like oil. Exchange traded fund ETFs that represent Brazil as a market, represents Latin America as a region. ETFs that represent small cap, small companies, big companies. ETFs that represent pharmaceutical companies, right? Tech companies. ETFs that represent the entire US market through the S&P 500, the NASDAQ, the tech composite index, Japan, China, Singapore, Malaysia, ASEAN, and so on. So the ETFs represent different asset classes across the whole world, and our AI picks up all this data and it looks at the behavior and it uses artificial intelligence to predict the volatility and the return. And then it mixes it up, like I showed you the pizza, to give you the different slices of each and finds the most optimal combination of pizza slices where the spiciness, the taste, matches the taste you set in our algorithm. So when you go and play our gamified risk profiler, based on the decisions you make in the game, our AI is interpreting your risk reward behavior and generates an assessment of your risk profile and recommends a portfolio in real time for you. And you can decide whether you agree or not agree, and then you can redo it. But it is diversified globally. So that's pretty amazing that I, as a professional fund manager, I can't do it. Not possible. That's why it's called AI.
I see. Okay, there's another question. So probably you might just take a look.
My connection just cut off just now, and the question is that if I put in 1,000 after a year, how much return will I get? Okay, it's a difficult question to answer because it's not a guaranteed return. But based on, say, the risk profile I chose, aggressive or very aggressive, depends on the market conditions. But in the last, say, 1 year, given even the COVID crash that came in, our returns was about 8 to 12%, easy, right? And the conservative was around 3 to 6%. So that's the two extremes. Going forward, I wish I knew, but we don't use a crystal ball to look at the markets. But if markets behave in the same way, roughly over the last 2 to 3 years, then I'd say the return should be easily 6 to 12%. It's a broad range, but if I'm looking forward, I don't want to mislead anyone by saying I know exactly what's going to happen. But our AI is designed to try and squeeze out more returns for the risk you take.
Okay, thank you. So just one final question. So you can just go to the chat, Victor. So there is this question from one of the audience.
Is Squirrel regulated by MAS? The answer is yes. We are regulated by the MAS. We have a Capital Market Services license number 800106. And excuse me, and we are regulated as an asset management company. So we are authorized to market our services. Yes.
Okay, so that's
the
all.
Shareholders. The question asked was the shareholders.
Yeah.
We are backed by an insurance company called FWD, and we have a technology company in China called PINTEC that does analytics and artificial intelligence in China. And then, of course, my founder, I'm the founder, and my friends, we also are the shareholders. Okay.
Okay. So all right. So now it's time. We have already exceeded the time. So anyway, so that's our last question. Okay. So thank you so much, Victor, and thank you to all our attendees for coming to today's webinar. Now, before we end this webinar, remember, if you're looking to save and invest for a child, remember to sign up for a KidSave account now. So from now to 31st December, you will get an exclusive SquirrelSave stickers. That's what I'm holding on right now, with a successful setup of an investment plan with $20 investment. Or if you would like to invest more, you can just spend $500 and you get a free bag. That's what we're just holding on. So terms and conditions apply. If for more information, to visit SquirrelSave's website at www.squirrelsave.com.sg. Okay, so Ken, thank you so much again for attendance, and we'll see you at the next webinar.
Thank you, everyone, and have a good night. Make sure you get your dinner. Speak to your children, by the way. All right, thank you.
Yes, thank you. All right, goodbye, everyone.